news, we have the management of CSB Bank, the MD and CEO, Mr. Mondal, joining us on the show. And Mr. Mondal, hi, morning. Thanks for your time. Let's first talk about your advances. They have grown at roughly 29% on a year-on-year basis. Do you expect to maintain it around this 29 to 30%, or is there any revision in your outlook going ahead?
See, our general guidances will be between 25 to 30% of advances growth for the full year. So far in this year, we have been able to manage that. And hopefully, if we don't have too much of a tight liquidity and we get the right amount of deposits, we should be able to do between 25 to 30%.
Right. And which factors are expected to drive advances growth going forward?
I think we already have a strong growth on the gold loan side. Our wholesale is picking up extremely well. SME, we have been a little cautious, so we have been holding back a little bit last quarter. But once we have more clarity on the bilateral deals and other things, I think SME will also start picking up. Retail is something which will take a little more time because I think the markets are stabilizing. The NPAs at a market level are coming down. And so overall, wholesale, gold, SME, and followed by retail. That's the kind of a trajectory we'll have.
Right. And Mr. Mondal, NIMs were expected to remain under pressure due to the 50 bips rate cut and deposit repricing. But the bank has registered improvement in NIMs on a sequential basis. If you could help us understand what factors have aided this improvement in margins?
So this I told in the last quarter itself and in the analyst call as well as in my interactions with the media that we have sort of bottomed out with our last quarter NIM somewhere around 3.52 and we expected it to go up. So three parts. One is of course the deposit pricing is starting to come down and bulk deposit had come down a little faster than the retail deposits. And because we have a slightly higher composition on the bulk deposits, still retail is much higher, but relatively compared to the markets. So we got some benefit out of that. Our yields are holding to a great extent on the gold loan business. And though there is a lot of pressure coming in the wholesale side of the business on yields because the market yields are coming down fast there. And also our EBLR book is relatively, EBLR and MCLR book is relatively smaller, somewhere around 39-40%. And our fixed rate loan is around 60%. So that is also helping. It's a combination of factors which we knew in Q1 itself that we should be able to do in Q2 better as deposit pricing starts coming down.
Right. And what will be your NIM guidance for both FY26 and 27?
It remains what we had given because putting a straight number to it is very difficult. But we'll be between 3.5 to 4. But I think for the rest of the year, we'll be closer to 3.7 to 4 in that range. So it will sort of remain where we are at this point of time, give and take few basis points here and there.
Okay, Mr. Mondal, thanks so much for that. We have visual